Starting a small business can be exciting, but the financial side can be a bit overwhelming. So that's where we come in. As an accountant, I will walk you through the essential financial steps to get your business started the right way. The first thing to decide is your business structure. Becoming a sole trader is the simplest type of business to set up and operate, and you will get to keep all of your profits after tax. However, you are personally liable for any business debts, and if your earnings are high, you may end up paying more tax than you would with a limited company. A partnership is a good option if you're starting a business with someone else. But like sole traders, partners are personally liable for any debts. This means you should carefully consider who you go into business with. A limited company offers greater legal protection as it is a separate legal entity from its owners. Directors and shareholders can take salaries and dividends from the company, allowing for tax planning to reduce personal liabilities. However, running a limited company comes with additional admin responsibilities and reporting requirements. All business structures have benefits and drawbacks, so it's important to choose the one that suits your needs the best. If you're unsure, make sure to get advice from an accountant before you register. Once you've decided on your business structure, the next step is to register with HMRC. Sole traders need to register for self-assessment to report their income and pay income tax and national insurance through a yearly tax return. Limited companies must register with Companies House and are required to file annual accounts along with a company tax return. Partnerships must register with HMRC as a partnership, and each partner must also register for self-assessment. This is because partners report their share of profits via their personal tax return in addition to submitting a partnership tax return. Make sure to register on time because failing to do so could lead to penalties and unnecessary financial complications. One of the biggest mistakes new business owners make is mixing personal and business finances, which can lead to complications when preparing yearly accounts and tax returns. If you're a sole trader, you're not legally required to have a business bank account, but we always recommend it so you can keep your business finances separate. Depending on who you bank with, you may not have to open a dedicated business bank account. You could use a personal account instead, but make sure to check the terms and conditions. Similarly, a partnership doesn't legally have to have a separate bank account, but we highly recommend it. Having a dedicated account ensures that both partners have access to business funds and prevents personal transactions from being mixed with business finances, making accounting much easier. For limited companies, having a business bank account is a legal requirement since the company is a separate legal entity from its owners. All business transactions must go through the company's account rather than a personal account. No matter the business structure, keeping your finances separate from day one will save you time and make it easier when you report your earnings. Good bookkeeping is the foundation of a well-run business, as it helps you stay on top of your finances and stay compliant. Keeping accurate records of all income and expenses is important as it allows you to make informed financial decisions. It's also important to categorize your business costs like rent, purchases, and travel to make the purpose of each transaction clear. HMRC requires businesses to keep financial records for at least 6 years in case they decide to start an investigation. However, did you know that they accept digital copies? Instead of storing piles of paperwork, you can use software like Dext, QuickBooks Receipt Capture, or Apron to scan and store your receipts electronically. These tools integrate with your accounting software, allowing you to get rid of paper records while keeping everything organized and accessible, saving you time and loft space. Now let's talk about taxes. Nobody loves them, but they are a necessary part of doing business. If you're a sole trader, you will need to pay income tax and national insurance through self-assessment. These are yearly returns that report on income and expenses from the 6th of April to the 5th of April and must be filed and paid to HMRC by January 31st the following year. Partnerships report income for the same period as sole traders, and like sole traders, partners must submit their individual tax returns by January 31st each year. Limited companies must file a company tax return to HMRC each year and pay any corporation tax due. Additionally, they must file their annual accounts with Companies House. The reporting dates vary depending on your company's registration date. You must file the annual accounts within 9 months of your year-end date and pay any tax due within 9 months and 1 day. The company tax return is due at HMRC within 1 year of the company's year-end. Regardless of your business structure, if your income before expenses exceeds £90,000, you must register for VAT and start charging VAT on your sales. We always recommend you use an accountant to stay on top of your tax obligations, as they are experienced professionals that can keep your finances in order and prevent you from missing important deadlines. Before you start, you need to figure out how much money you need to invest in the business to help with startup costs. Common startup costs can include business registration fees, setting up a website, branding, purchasing stock or equipment, and advertising. Having a clear budget for these expenses can help you to avoid overspending and helps you to stay on track financially as you get your business off the right ground. As your business grows, your financial needs will evolve, and it's important to stay ahead of these changes. You may need to hire employees, which means you will need to register for PAYE to manage your employees' tax and national insurance contributions. Additionally, as your business expands, you may want to apply for business loans or funding to help support new investments like purchasing new equipment or creating new products. Regularly reviewing your financial reports, including your profit and loss statements, balance sheets, and cash flow analysis, will help you to make informed decisions, keep track of business performance, and avoid potential cash flow problems. By keeping an eye on these and adjusting your strategies as needed, you can help to ensure the continued growth of your business. And there you have it, the financial essentials for starting a small business. Taking these steps now will save you so much stress in the long run. If you found this helpful, don't forget to give this video a like, subscribe to our channel, and drop a comment if you have any questions. Thanks for watching, and here's to your new business success.